Infrastructure can play a direct role in stimulating economies and maintaining employment. In addition, it is more important than ever to use this stimulus investment to enable a sustainable recovery. In the upcoming session, Sudhir Pal Singh, editor ETINFRA, The Economic Times, will delve into a fireside chat with our esteemed speaker, Mr. Atanu Chakraborty, part-time chairman, HDFC Bank, on the future outlook for sustainable economic growth through infrastructure investments. Please take the conversation ahead, Sudhir. Over to you.
Ladies and gentlemen, a very warm welcome on our platform. I am Sudhir, and this is a fireside chat on Indian infrastructure investments and what is the future outlook on sustainable economic growth. With none other than the chairman of HDFC Bank, Atanu Chakraborty. First of all, a very warm welcome to you, sir, on our platform. Morning. Let me begin by asking you what according to you has been India's track record when it comes to attracting investments in the overall infrastructure sector. If you could share some highlights of that. And secondly, also, according to you, what are some of the top trends or possibly sector-wise, if you could share, observed over the past few years when it comes to growth of the infrastructure sector in this country?
Well, Sudhir, this is where a report card sort of a thing is being written about the infrastructure sector, especially after an economic slowdown followed by pandemic, which actually had put spanner in the works, so as to say. However, again, in this sector, as you would have seen, you have been watching these areas for quite some time, is always very difficult to put all the numbers in place. Otherwise you'd like to have all the physical numbers and all the financial numbers to know where one is going all the time. And possibly Gati Shakti would to some extent answer some of these questions as well as one goes along. However, for our today's discussion to get a trend going, to at least understand where we are going, at least one sees a sort of upward trend. If I can share some numbers with you, in FY21, infrastructure activities saw upward of FDI of upward of USD $12 billion. More interesting was that institutions like NIIF over last 3 years have been able to raise for equity alone about $4.5 billion, which included big pension funds. That shows confidence. Investment is ultimately a function of confidence. Then you have renewable energy, which has seen almost PE funds of every conceivable nature coming around with about rupees 1 lakh crore. Road sector seeing about 5.5 lakh crore, gas transportation sector. Things are building up. Amounts may not look very, very big. The commitments are in the range of about 15,000 crore. But there, as it goes along, money comes in. But both gas transportation, that's natural gas transportation, and CGD, both seem to be attracting investments today because they are putting their contracts out and doing things.
So what is the timeline that you're considering here?
Where I'm looking at for them in next 3 years, one should see, the petroleum minister was on record saying that in CGD sector, he would see roughly 1 lakh crore over a period of time, but possibly over, I can see both transmission and because they tend to go together, and CGD sector should at least see at least 50,000 crore over next 3 years. That seems to be, and very interestingly, about 217 projects worth 1 lakh crore out of NIP have already been completed. So that also shows that that much of a money is already in the table, already in. Affordable housing, one has seen both in Jal Jeevan and affordable housing. Those are budgetary numbers, so I'm not really recounting those numbers that are available in public space.
Okay.
There is a lot of investments there. Looking at sector-wise trend, in the backdrop of COP26, I should touch at renewable first. You are also an expert in that area, Sudhir. And you already know is upward of 100 gigawatt already in place, 50 gigawatt already, already being built into and being, brought in. And the investment is quite substantial. Tariffs are down. So storage being experimented upon. Issue is discoms and which are affecting both the viability of discoms. CGD and gas transmission, it has already covered 50% of the geographical area and 70% of the population. So one is looking at adding perhaps 1 crore more households into the CGD sector. And once the CGD sector starts pushing in gas transmission lines start getting viable and get funded at a much larger scale. So there is a lot of iterative process between these two. In road sector, I had mentioned 5.5 lakh crore has gone, 4.5 lakh crore more is likely to go. But as far as trend go, and you see a very interesting trend that now the country is accepting the need for expressways. We are perhaps the last emerging economy which went into it. We should have gone in much earlier. But Prime Minister had been that way very visionary in pushing both in railways, the bullet train, and in roads, the expressways. And the results are on the ground. You will very soon see the results coming. Railways is seeing almost 2 lakh crore per annum, and perhaps it should see more when the privatization of rail, operational of rail should take place, and marquee project of bullet train comes in. There are views about it, but that is a different issue altogether. And dedicated freight corridor starts operating along with logistics and other things. So we'll see even more. Airports, about 80,000 crore is expected. Jewar, Navi Mumbai, Rajkot are some of the airports, and many more, because I think now Udan would, the effects of Udan would be seen, and not only in terms of transport of goods for people, but also goods, because a lot of agriculture commodities are likely to move. And of course, there's a digital infrastructure on which investments are already there. So these are roughly the manner in which I see the infrastructure sector in the country is moving. And the biggest thing is on the radar. It's on the front burner. And that is the big thing. It's very important the country to see that the economic investment doesn't come through economic growth, doesn't come through plain subsidy giving away, which was what a lot of people said, but it comes through a multiplier effect that infrastructure is bringing.
Okay. Yeah, no doubt. Absolutely fair points you have made, sir. One thing that I want to understand, you said $12 billion FDI in last financial year, 2020-21. What's the scene looking like for this this current financial year? Where do you think that number landed?
Numbers tend to be lumped many a times. Infrastructure, we'll see the numbers are lumpy. I was looking the number at this year. Right now, it was turning out to be about a few $1 billion, but it's not.
There's definitely going to be a growth
as of now, and putting it together, sometimes double counting, sometimes half counting. So at the end of the year, when the number comes together, you get a much better thing. What comes through is that the various people at various places are now willing to commit their funds, and the drawdown takes place when they have to make a payment. So that's when the FDI actually moves in. So
it also depends on, maybe even if 1 or 2 large sized deals happen, and that number. So there's always you can always look at that number with a pinch of salt.
And then there is NMP, which is also moving on the, I was talking about the greenfield side. You have the brownfield projects, which perhaps would bring in much larger flow of FDI than on the greenfield type to start with, which is expected.
Okay. You've partly talked about NIP, and I'm tempted to ask you. You were one of the people who were involved in that entire exercise, in those deliberations for NIP right from the beginning. What was the larger philosophy or the vision? When that work was being done, and where do we stand today? You may have partly covered it, but I thought I would ask you.
Well, I was there when NIP is there. So I had some role in playing with a team, which was an excellent team, which prepared this document. So it was a team effort spread over 28 departments and very large number of people, both from private and public sector. Was done in a period of 3 months' time. So it's an excellent team effort by a very large set of people. So I can, many of them perhaps would never be named in the report, but they continue to, their contributions are immense. However, its genesis lay in, everybody sort of tended to agree that, you needed infrastructure development for country's economic growth. But 2019 budget very specifically put down reaching a $5 trillion economy as a target. And, the way to reach there and to improve capital output ratio, it is very important that you had a quality, sufficient and quality infrastructure in place across all sectors. That was also the time when country felt that to improve its competitiveness, it was important that we have infrastructure. For example, unless you had good warehouses, unless you had roads which could improve the turnaround time. On the social side, you needed, important thing was an efficiency, equity, and inclusiveness had to be a very important part as one moved from $3 trillion to $5 trillion. Otherwise, some people would get left behind. So that's where the infrastructure development comes in, because it brings in those things for improving the quality of life and also the ease of living to the global standards. And at the back of the mind, it was always there that the infrastructure in India, the index of infrastructure in India should start touching the in the tops among the global. Not to see the leaders in every aspect, but certainly move from the middling to, and in some places even on the lower half to the top halves, first 50, first 30, that kind of thing in various sectors. So these were some of the things which sort of drove the entire philosophy, which was underpinned by the Independence Day speech in 2019 and had been subsequently reiterated in budget this year as a part of, pushing up, the growth in the economy. So, so this is what was driving the vision and the strategies towards drawing up such a plan.
Okay, fine. Can you also help us understand, for India as a country, and we have huge ambitions for really high-paced growth, and at the same time we want sustainability to be there. And the kind of juncture at which we are currently from economic growth point of view, why it is critical for India to ensure growth in infrastructure investments continue despite all the challenges that are there in the current environment. Globally, domestically, there are multiple challenges. So why it is critical?
Yeah, that is a very, very interesting and a very good question, because somewhere it always gets asked as to why we should do, why the same amount of money cannot be given to people directly, and their lives would improve on the given day. However, unless you use the word sustainability, if the economic growth has to be sustainable, you have to provide water to people. You have to provide good quality roads to people. You have to provide social infrastructure for people. And at the same time, we have to keep the economy sustainable, which means the macro factors should remain reasonably stable, which means government finances also have to remain stable. So in a sense, that also brings in private and public together. You have to ensure that your debt markets do not get burdened down. And the governments year after year do not borrow just to, to provide some money directly, which in turn people will sow this infrastructure services privately. Like, why should anybody buy water from a tanker, for example? Why shouldn't piped water should be there at every home? if you have bad quality roads, the vehicles are only going to spew more venom out of their exhaust pipes. So in a sense, it becomes an accepted wisdom, though challenged wisdom all the time. And it happened,
Yes.
I remember, when metro was being built, this was challenged. People said, why should you build a metro? It's going to cost so much. It's not meant for India.
There were protests.
They were, absolutely. And there are there. I will not say that those challenges should not be engaged with. I will not call them Luddites, but well, they're there. And to improve the economies of scale, lower the cost of production, improve our competitiveness internationally, unless we have electricity which is 24/7, which is doesn't cause large carbon imprint. We have good quality roads, which will also reduce the carbon because the vehicles will not be there, on the road all the time. They can finish their journeys very quickly. And we have water, we have rest of the social infrastructure. And also linking the demand centers with the production centers becomes very critical. While, an Amazon or a Zomato can provide you things at place, but they have to ride on something. They have to move on something. The goods, people, and services have to move on something, and that is what the infrastructure is. And China's recent investments in the past and USA's recent infrastructure bill prove this point, that they are also looking at stimulating the economy through a sustainable means of infrastructure investment. It was done post Second War, which provided a very large underpinning to US economic growth. China did it. It provided underpinning to China's economic growth. And I guess we shouldn't be missing our bus once again. So I feel it's, if there is one critical element today for India to bounce back and retain its sustainable economic growth, that's a continuous investment in infrastructure.
Okay. Can you share some of the top challenges that are typically faced by banks, and also, opportunities which are available to them when it comes to funding infrastructure growth, particularly from the point of view of the post-pandemic economic scenario, the way it's panning out in this country?
Post-pandemic, Sudhir, very difficult to predict post-pandemic. So not post-pandemic.
It's still at a stage where you don't know where it will really go. Okay.
I pray to God that it is post-pandemic, but let's live in the world and a very, very which is fluid, and continue to work on it. And we do expect, with vaccines, people being educated in a COVID appropriate behavior, both the fatalities and hospitalization and consequent breakage, sort of stoppages in the economy would be lower. They also reduce confidence, and flow of people and services get blocked.
Yeah.
Having said that, to meet this requirement of the large funding that is needed, we need a financial system which is robust. In its capacity needs to be improved. If I'm making that statement, this is more of a truism. It's the amount of monies that are required would require robust financial institutions in a much larger scale than they exist today. Otherwise, in between 2000 and 2009, we had seen a very high credit growth, large part of its infrastructure. However, they could not sustain themselves because many areas the reforms were not carried out, and also there were gaps in financing. I will just take, and while in the post-pandemic period, you're going to have, let's face it, you are going to have a compression in aggregate demand. Infrastructure investment is what is going to pull it out. Therefore, post-pandemic, that is where the financial institutions do come in after the projects are prepared. But the challenges they face is, number one, is poorly prepared projects. And that is where NIP had come in. to at least identify the projects. And then I understand they come from the public space. Various government departments are now making a lot of effort to produce good projects so that when they come out, they are also bankable.
Bankable, yeah.
That you have bankability of the projects, and a bankable project, if it's going into a PPP mode, then the risk sharing arrangements have to be much better than the very rigid concession agreements that they existed before.
And we have seen some really bad examples too in the past.
Oh, yes. And I guess unless you have bad examples, you don't learn. It's a continuous learning exercise, which you felt today was a very good concession agreement becomes a very rigid one tomorrow. So that fluidity and to be able to come back to it is very, very important. On the bank side, banks are the first port of call for any developer because of relationship. They have the relationships. Where will people go to fund after they have put their equity? They're going to go to banks. So banks world over and have done, and in India also would continue to fund infrastructure, whatever people say. They are going to in a syndicated fashion or otherwise, they would do it. However, their capacity to sustain very large exposures over a long period doesn't exist. And we do not want there the strain coming in and NPA is getting created, because then they try to shorten the length of the loan, cash flow is not there, and the problems get created. Therefore, an exit mechanisms are important. And the exit mechanism is a bond market. Therefore, the critical development today that needs to be done, it's being done over a period of time. Actually, there are a lot of efforts that have been made for bond market. I guess is a prime requirement today that it gets speeded up further. If there's an area of focus, if you ask me, it's bond market. There are various components of it which are fairly identifiable, and we keep putting them like your credit enhancement, greater clarity in netting so that the counterparty margin comes down and people can do CD swaps much better. The conduct of the bond market itself, one knows who is the regulator and the conduct happens better. And also the, already the tax treatment of bond and the equity securities, there has to be a level between the two. Therefore, so that larger investment comes between the two, so that asymmetry which is there, if it gets removed over a period of time, and these are work in progress always. However, the time has come to address this. And the corporate bond market for infrastructure is also very closely intertwined with the GSEC market, which government has opened up very substantially. And recently it's been opened for the retail investor in India also. And the Prime Minister had talked about Indian bonds to be the part of the global indices, so that more money moves into this. Then the capital structure of the developers would be sustained over a period. Banks would have greater appetite for funding the projects because they see an exit. And then, of course, other than bond market, there are infrastructure finance companies like IFCL or ASEEM by NIIF and the DFI being set up. But their products have to be not only, the long tenure loan products, but also products of this nature, which help develop bond market. Actually, that is one criticality. Apart from, as I talked about, these areas would help, financial institutions to start funding it. And thereafter, of course, we have a very robust capital market where, then IPOs can be done, people can raise more equity, the PE funds are there. So it's a long-term game, and there are bound to be players of various varieties. Those who come in the early phase and those who run the projects are very, very different people.
Yeah.
That would also help develop engineering companies who do good design and everything. So very large number of those skill sets are also in place, which are needed beyond plain financing.
That's right. Yeah.
But they start coming in when they see more projects, appetite is whetted, people start moving in. So let's hope, these, a lot of measures are there and some of further measures come into.
Yeah. On all of these measures, on all of these counts, all of these factors that you've talked about, what has been the experience of HDFC funding infrastructure projects, and what are the main drivers of growth there?
It faces the same problems as all other banks face, the ALM issue, because ALM issue is very critical for every bank. No bank wants to be out of money, and more so HDFC, which is very concerned about the depositor base, which funds. However, that notwithstanding, it's almost today stands number at the second place, number 2 in funding infrastructure project. And in HDFC, very, very bullish on this, especially apart from other infrastructure. If I talk about affordable housing, together with HDFC, it has a very elegant mechanism of funding affordable housing. Plus, another one of the funds has come up, which has raised more than $1 billion in commitment for affordable housing alone in equity side, which to my mind would be one of the biggest in the world. And its book on infrastructure investment side on the is as I was mentioning, it's perhaps after SBI the second biggest. We like to expand it further. And we'll expand it very aggressively, because the bank sees this as in an opportunity which is there available there to fund good projects, and that's where the bank also keeps looking at improvement in corporate bond markets, more long-term financing or the mezzanine financing coming in, where the takeout take place. That would be true for every other bank. That I said, the financial sector as a whole would need that. But HDFC certainly HDFC Bank sees this as an opportunity which would in turn spur growth, in turn would bring in money with people where the bank is fairly well connected. Their investment in various asset classes, their savings, which could be turned around further, is a business both for the bank as well as for the people who would then, the money so earned would go into different asset classes. So in that sense, it becomes a microcosm of an economy at large. So it lies at a very core, and we see that there is no getting away from this. So and no getting away from any bank for that matter, but they need to manage their book appropriately. That goes without saying.
Okay. One last question that I'm tempted to ask you is, in the beginning, is when you were talking about sectoral breakup, you started by talking about renewables and gas, and a lot of really good work is happening there, no doubt about it. In fact, the kind of things that are happening now, decarbonization, decentralization, these are things that were waiting for many years, if not decades, and now they're happening, which is very good. But what about sectors like let's say power distribution, right? Or the need to improve our production of oil on oil front, right? So that we can cut down on import dependence. These are two, so to speak, tough nut to crack, right? So things are not changing much there. Is that a concern? How big a concern is that from how do you look at it as a infrastructure financier?
So there you have picked up two very difficult questions in the book, and both very critical, because interestingly, on the oil and gas distribution side, your tail end is doing pretty well. They have models which are bankable on the oil and gas side, CGDs or the gas or oil consuming refineries and the entire. And electricity, it's the reverse. You have power generation side, which is fairly bankable. The discoms, I need not say that. one thing is very important, I guess we have been missing, is that the commodity risk in the discoms is lumped with the infrastructure risk, which is preventing long-term money from.
Okay.
Sometimes discoms tend to be a bit greedy, thinking that they'll make money out of the contracts that they have. But it creates more headaches from them than otherwise. They can always compete. They can also sell there. And therefore, the opening up of the lines for electron from the third party, which the law provides, but it's the discoms who tend to oppose it time and again, is critical for the health, improving the health of discoms. Otherwise, time and again, they tend to get into, because they got to have investments in improvement of infrastructure, ownership structure, governance structures across everything. And for that, electron for multiple sources is needed so that they work like an utility where the volume matters. And the guy on the other side, if a power is being produced at 3 cents per kilowatt hour, I shouldn't get it for more than 4.5 cents. And that's what equity comes and inclusiveness comes from there. And that happens through this. Similarly, on the side of, on the oil and gas production, upstream, the help opened up in a big way for people to come in. As much area has been brought into exploration in last 3 years, 3.5 years almost, as much was done during the entire NEL period, 1 to 10. However, there the fruits come in slowly. There the discovered small fields have started producing. I guess as now ONGC has started that they are shedding some of their existing fields. People will come in brownfield also. They want quick cash flows. Therefore, ONGC selling some of its field where its own capital restraint stops it from funding, allowing others to fund together in JV or otherwise or any other mode, would go in a long way, because those are discovered field. They are very well mapped. The reservoirs are known. Money can go.
It's a safe play, so to speak.
Let's face it. This is this is the volatility being introduced on account of import dependence. If it doesn't go away, it poses a great risk to the economy.
No doubt.
Therefore, our choices there are limited, and we need to move very quickly on this. Good news is that the KG fields have started producing big time. A lot of gas is coming in. So that is showing a upward trend. And I think we should hear some good news from other geographies also, which have potential, but the wells need to be opened. The gas exchange has been started. Now it will have to get more refined. But large number of wells also could not be drilled because the value was not discovered. The price was not discovered. Investment doesn't come in a regulated price scenario. Though government declared a free market price, but that price discovery mechanism has not come up. So I do hope the exchange now moves very quickly, its volumes pick up, so that a good price discovery will give me an investment. And that is very much needed for opening up many wells, which will see us through the cusp, while from those recently explored field more discoveries take place and investment come big time.
Okay, on that positive note, I think it's time to wrap up this discussion. It was such a pleasure to talk to you, Mr. Chakraborty, again after a lot of time. And I think we've covered a lot of really important things, whether it's the flexibility required for concession agreements or the need for a robust bond market. A lot of really important things we have touched upon, and a lot of important key takeaways for us. Thank you for your time, and we really look forward to hosting you again on this platform. Please carry on. Thank you.
Thank you, gentlemen, for an engaging chat session. Time for another interesting discussion. Stay tuned and keep the tweets coming using the hashtag ETINFRA Investors Meet.